Okay, welcome everyone. If you're looking for trade ideas, looking for stock market opportunities, that's what we point out here on this channel. Everything's just my opinion, but again, I'm looking at the charts. I'm using technical analysis to hopefully find some opportunities where we can all profit from. Okay, I'm not a financial advisor, but just an analyst looking at charts. Guys, Fed is out of the way, and we saw that huge rally yesterday. Again, I continue on all my thumbnails and all my videos over the last few weeks to talk about how I think we're going to get a rally and going to continue to rally. If I look at the daily chart here on triple Qs, this is your tech sector. Again, when I was looking for that rally, you go back and look at the comments when I first started talking about how I think we're going to get a rally, and everybody was bearish. Not everybody, but I mean, most of the comments were bearish. Couple traders that are follow along with me, that's kind of they're kind of smart money, they were with me on that one. But from the bottom here on triple Qs, we have now rallied up 13% off the lows. I think we got a little more to go on the upside, and then we're likely going to want to flip short, so we'll keep an eye on that. Now, Apple earnings comes out after the bell, and that's a huge market moving stock. They have the potential to move the markets. This rally that we've seen over the last few weeks could be ended basically by how Apple earnings are perceived. So keep an eye out on that. We'll have to just look at the Apple chart there. Okay, so triple Qs, we'll get into it. Drop me a thumbs up as you guys find value. Check out my course. If you're new to my channel or you've been with me for a while but you haven't taken the course, I really feel like you can benefit from that course. That's going to teach you a skill set. You can go back and watch it again. I give you guys a checklist on what to really look for solid trade setups. And again, at the end of the day, trading is about finding the probabilities, favorable probabilities, finding trades that make sense technically as well as have good risk reward ratio, and then taking the risk. Obviously there's always risk involved, and then managing that risk. Okay, if you follow those steps, you're going to find out more often than not you should come out ahead. At least that's how it's been in my experience. No guarantees, of course. All right, triple Qs, guys. Oh, and that course, link in the description below. So just open up the description, click the link. You'll see it. It's not free, but it is a good value. Triple Qs. All right, we got to pull back now. Let's look at what we got going on. So if you look at the hourly chart here, let's see what we got going on right here. On triple Qs, we clearly broke out. All right, we had resistance there. I've really pointed that out over and over. We broke out and looks like we've got a back test. So there's your breakout, there's your back test, there's your continuation. We need to take out the most recent highs. It's about 307. We take that out, and at that point, it's pretty much like the trade will just about be done. On the long side, it will be obvious to all. And there's not going to be too much more opportunity to get long on the market once we take that out, or if we take that out. Okay, moving, the next levels of resistance where I do think we're heading up to 314.90, 315-ish, somewhere right in there. And then the final area of resistance right now is about 329. Okay, so Apple earnings, could spark a strong rally, could put a damper on this rally. We don't know how that's going to play out. We do, if you look at the hourly, and this is where I'm thinking that we're getting close to the end of this rally. I think we got one more leg higher, but negative divergence here on the hourly. So you'll see we just made we're making lower highs in the momentum. All right, so there it is on the RSI. There it is on the PPO. If I can grab it. And this high that we just made yesterday was a divergent high. So we're starting to build negative divergence. That tells me that this rally is coming to an end. All right, we're getting closer. I don't think it's over yet, but we're definitely coming to an end. Looking at the daily chart here on triple Qs, again, there's our resistance levels, and this is where I think we're heading. The 200-day SMA is right above. And this downtrend line, all right, this is the downtrend of the bear market, all right. Triple Qs is in a bear market, recognize that, and we are continuing to make lower highs and lower lows as we downtrend. But there's the downtrend. So I'm looking for a move up to that downtrend, and that would be it for the rally. likely keeping the divergence intact. So likely how this is going to work out, just reading the chart with this negative divergence, it tells me that maybe we've got one move up, I wouldn't say a final move up, but one move up to this 315-ish area. We'll keep the divergence intact, and that would be a point where we're likely going to have some sort of a tradable correction or move down. So I'd be looking to exit my long trade here. Maybe we get a pullback down to the trend line. This is your support line down here on this trend. See it right there? So if you trade and then maybe work our way down, hit that, and then do one final leg up. I have to go to the daily to show you, but one final leg up to this downtrend line here. And at that point, it wouldn't even be 329. It'll be like 325. And that might take, a couple more weeks. And that's really how I see this playing out. That's how I'm looking to trade it. The SPY has the same kind of look. This is an hourly chart on the S&P 500. The SPY, negative divergence on the RSI and the PPO. So that was a divergent high. Apple's going to change everything basically. But if I go to the daily chart, this is your resistance line up here. It's all the way up there at 434 or so. And we also have good resistance right here at 410. It's about 411. Okay. So the way I see this playing out, doesn't mean it has to, but here's what it looks like, how it's going to play out. I think we gap up tomorrow on Apple earnings up around this 411 area, 410.50, somewhere right in there. And then they'll sell it. All right. It'll be a sell the rip kind of thing, but they'll sell it down. So we gap up, we sell down, maybe come all the way back down to this 389. All right. So gap up, move down, hit that support. And then in the next coming weeks, maybe rally up to hit this trend line. Okay. And then that would be the end of this bear market rally. All right. At that point, you'll have a lot of the headlines. Everybody will be bullish, most of the people at least. And it will, it will set us up for the next move lower in this bear market. Facebook took a position on this one this morning. I like it on this back test. We'll see if we can hold. Obviously, Apple has the potential to ruin it, but earnings is out of the way on Facebook. So they got smoked in the, at least so far, but I think it's a buying opportunity. I've got a bullish falling wedge pattern here. So you see the wedge right there. All right. Bullish falling wedge. We have a breakout over the last couple, back here. So we broke out, coming in for a back test. So this is support right in here. And then that's an objective area to go long. Again, bullish divergence on the momentum indicator. So this wedge came with bullish divergence. Tells me that we're breakout, back test, and we should run. All right, we should continue to run. Targets that I'm looking at for Facebook. As of right now, possibly up here at this 245.20 area. All right, that is going to be, there's a big gap right there. That would be gap entry, and the 200's kind of right there. It looks like it's going to maybe come in together. So that's what I'd be looking for as of right now. I like buying it right there, and I did take a position long on Facebook this morning. Apple. Okay, so Apple's got earnings after the bell. Let's go down to the hourly chart here on Apple. So you see a slight negative divergence showing up. So you'll see it right here. Boom, boom. This was a divergent high. Okay. We've got this trend line to watch. If I go to the daily, you can see this big support line, and which is, chart's moving around. This is now resistance. So see all these reactions on this trend line here? Lots of them. Okay, so as I zoom in, if we gap up on earnings, we're probably going to gap up right to that level. Let me extend that out a little bit. And I'll have to kind of dial that in just a little bit, make sure I've got it. So we could gap up, at least in the area. So gap up to this 163-ish area, somewhere right in there. That would be major resistance. So that's what I think is going to happen. I think Apple's going to gap up and get sold down on the open, or at least right after that report. So I'm looking to probably, sell tomorrow, sell some of my longs, as long as triple Qs can rally up to that like 314.50-ish zone. That's where I'll be looking to sell. So I think we gap up and then sell down, and then who knows from there. Maybe we sell down to this level right there at 151, hold, do another back test, and then that's the end of the bear market rally. All right, so there's all hypotheticals. I don't know what's going to happen, but there's how I think it's going to play out. Okay, some short trade ideas that I've talked about. So Zillow Group. Zillow has earnings coming up right here on August 4th. So we might have a little play in between there, but I don't like to have large positions right ahead of earnings. It's kind of a gamble. So what I'm probably going to do on Zillow is just lighten up on this one. It does look like a bullish chart. I've got a bullish falling wedge. I've got bullish divergence. I have a breakout. It's kind of got everything I need. I've got a back test here, but I also have earnings coming up. So that could kind of go either way. We might just kind of chop sideways into earnings, and then after earnings, decide, but it could go down, do another back test, could go up. We don't exactly know. So rather than take the gamble, I'd rather just lighten up. Again, I bought it right there on that back test. Nice strong day yesterday. It was up, from that back test, basically up almost 7% or so. I'd rather just take that 7% profit and then just wait and see. And that's what I did. So I'm not in this one right now. PayPal, this one also has earnings coming up. We are holding this support line, but with earnings, big strong day yesterday, it probably makes sense to just lighten up and take profit on this one as well. Netflix, still long Netflix. Earnings is out of the way. Again, we had a bullish setup. We had this downtrend line. We had strong bullish divergence that was building. We're definitely overbought, but again, I think the play right now is probably a strong move up. Gap up, and then we sell down. So I'm looking for Netflix to probably gap up right up to this level, 245. It's about 246. Okay, that's gap entry. So I think we gap up to there, maybe sell down, hit the trend line again, and then break. But the trade for right now, at least for me, is to gap up at this 246 area, and then probably go ahead and get out of that position up there for a pullback. All right, so that is how I'm playing that. Okay, so the Fed did come out yesterday, and they basically did the 75 basis point hike. They did start to back off their hawkish talk, exactly like I've been talking about really for months. Now I've been talking about the fact that the Fed can't raise interest rates that high. So what they're going to do is come out hawkish in the beginning, talk a big, mean, tough game, do some scary hikes. But they can't go that far. So they can accelerate quickly. Think of it like a muscle car. They can accelerate quickly, but they can't do a high-end top speed. They can't go that far. So come out strong and then taper off. And that's exactly what they're starting to do. So they started to talk back their hawkishness, and that's the initial thing of it. They'll probably continue to walk that back. The Fed futures rates are going to start to drop a little bit, and the reality is that they're going to take a break, all right, on hiking. They're going to wait and see, and that's likely going to give the commodities another leg higher. And that's, again, just my thesis here is that the Fed, the inflation trade is going to continue to work for probably the next decade. The Fed will fight it, and then they'll stop. They'll fight it, and then they'll stop, trying to never go too far to completely collapse the economy. Because the reality is, if they go too far, we basically go into a Great Depression. So the Fed won't allow that. They're not going to, they will side on easing off a lot sooner than they will pushing us into a depression. So oil still holding support. We saw oil rally yesterday. No technical breakdown in oil. So oil futures, there's your support right there. And we are continuing to hold that support. So yeah, looks bullish to me. And then the ag commodities look like they're kind of catching a bit as well. Wheat looks interesting. Look, support. There's more support. All right, we came down, boom, hit support right there, and we are holding. Okay, this support also came with bullish divergence. See it right there on the daily. Boom, that was a divergent low. So looks good to me. It looks like we're going to rally, at least for a tradable bounce here. Gold bullion trading into resistance right now. It's at 1754. That's some resistance right there. But I am seeing signs in the miners of a bottom, a near-term bottom at least. So if you go to like this one, AG, all right, this is silver, but I kind of track them all the same. All right, so silver, you've got a bullish falling wedge pattern. You've got bullish divergence. You have a breakout, all right, and a buy signal right there. So That's a buy signal on AG from my perspective. The major target on this one, usually what you do is you take the wedge, you kind of run it like that, and it basically is putting us in somewhere right in that 833 area, so another dollar up. So yeah, that's what I see. But in general, looks like a short-term bottom, and I'm seeing signs across the board on a lot of these things. Let me see if I can find some more. Well, not completely. I take that back. But there's a cut. They're looking generally decent. GDX though, still trading right there within the wedge. So if I go like that, there we are, right at resistance. We need to see a breakout of GDX. So bullish falling wedge, bullish divergence. The setup's there. It's a bullish setup. Need that breakout here. So you get the breakout here, the rest are going to follow, and it'll all happen at once. But we're starting to see signs in some of these miners. They don't all trade all at once. Some of them lead, some of them lag. But in general, you get the breakout in GDX, and that should be kind of a bottom, basically a signal that the bottom is in, at least a near-term bottom. Okay, I'm not saying that the complete bottom is in, but I like it. And the fact that the Fed can't raise rates, that they're clearly going to just ease off for the next few months. That's going to open it up for gold and gold miners to rally over the next couple months. So I like it. This one's kind of interesting, kind of a commodity trade here. Vale. Looking at the daily chart, you've got big support, really started back in 2016. So there's your trend, support, support, support. And recently you can see the undercut it right here, but boom, recovered so far today. The only thing that I would say is we got earnings coming out after the bell, so I think it just makes sense to wait till those earnings clear. But you see bullish earnings or anything that kind of can, as long as it can hold this trend line and hold right in here after the earnings, then to me this looks like a bear trap. All right, looks like it's a false breakdown bear trap, and we should rally. Minimum target, at least to the 200-day moving average, would be the minimum target there. And yeah, I think there's good potential on that one. Bullish divergence, see the bullish divergence on Vale on the RSI. So all this price action was a divergent low, and yeah, it's kind of equal divergence there on the PPO. So if I had to lean one way or the other, I'd say earnings are going to come out bullish. They're going to be perceived as positive, and it'll rally. So, but you never know. The thing is with earnings, they might gap it down and then step in and buy it after the earnings. I would look for that. That would probably be a beautiful setup. If you can get a bad earning thing where it gaps down just a little bit, maybe down to here, 1345, 1350, and then they step in and buy it and recover the trend line, boom, that would be a buy signal to me. Okay, and then I'd look for a move up to the 200-day moving average, and that would potentially be about a 13 to 15% gain, something like that. Okay, so there's a setup. I would just wait till after earnings. Okay, guys, that's all I have. Drop me a thumbs up, leave me a comment, check out my course. Those are all important things that helps the channel, and I think it can help you as well. So I will catch you guys on the next video.